Hey there, let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. Welcome back to the channel for your daily dose of crypto news. Buckle up, because today's got some regulatory tea and market updates. First up, the Fed just threw some cold water on our crypto party. They decided to keep interest rates high for the rest of the year, which could mean less money flowing into riskier assets like Bitcoin. Brr! Speaking of Bitcoin, the price is still on a roller coaster, folks. But hey, at least it's around $61,000 right now. We'll break down what the analysts are saying about the short-term future in a sec. Big news for Binance. The U.S. Department of Justice just put Uncle Sam's eagle eye on them by appointing the FinCEN to oversee their operations. Looks like crypto exchanges are getting a closer look from regulators. And the plot thickens in the Tornado Cash drama. The DOJ shut down the CEO's argument that his arrest violated his free speech rights. This legal battle could have major implications for privacy-focused crypto tools. Finally, Mark Cuban is calling for the CFTC to step up and take control of crypto regulation before the U.S. midterms. Seems like everyone wants a piece of the crypto pie, but who will get the final say? That's all for today, Crypto Fam. Stay tuned for more updates, and don't forget to smash that subscribe button so you don't miss a beat in this wild crypto world. So, here's the scoop on what's happening with the Fed and interest rates. Michelle Bowman, one of the bigwigs at the Federal Reserve, is pretty adamant that they're not going to slash interest rates in 2024. She's like, look, we've got this 2% inflation target, and we're not there yet, so let's keep things steady with the rates. She had this chat with Bloomberg News after giving a talk in Texas, and she's urging the central bank to be super careful and calculated to get inflation back down to that sweet spot of 2%. It's like she's saying, we've got to play the long game here. And she's not alone in this. During the week, a bunch of other policy folks were nodding along, agreeing that keeping interest rates on the higher side for a bit longer is the way to go. Lori Logan, who heads up the Dallas Fed, was over in New Orleans saying, hold your horses. It's way too early to even think about cutting rates, because the inflation numbers are still looking pretty high. Now, there's a bit of a wait-and-see vibe going on. They want to see how things pan out and keep their options open, adjusting as new data rolls in. And just last week, the Fed decided to keep rates at this 2-decade high, which hasn't changed since last July. Jerome Powell, the Fed chair, was like, the recent inflation figures? Yeah, they don't exactly fill us with confidence that we're hitting that 2% target anytime soon. Bowman's take is that after a few months of less than stellar inflation data, it's going to take a good while before we see it getting back to where it should be. And she's thinking it'll be several meetings down the line before she's comfy with the idea of lowering rates. She did mention that the U.S. economy is chugging along nicely, and people are still spending money like there's no tomorrow. But she's got this caveat. If the economy gets hit with a shock, they'll tackle it head-on with monetary policy. And then there's Austin Goolsbee from the Chicago Fed. He's like, I'm not seeing a ton of evidence that inflation is cooling off as much as we'd like, but he's also playing his cards close to the chest about when they might reduce rates. He told this Minnesota Economics Club event, announcing a rate cut now? Not a great idea because there's a whole lot more data we need to look at. So, that's the lowdown. The Fed's playing it safe, waiting for more data before making any moves on interest rates, all while keeping an eye on that elusive 2% inflation target. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. All right, crypto crew? Bitcoin this week has been on a wilder ride than a unicycle on a tightrope. Prices dipped below $61,000, sending chills down spines faster than a haunted house on Halloween. But fear not. Bitcoin bounced back like a ninja dodging lasers, currently chilling around $61,000 again. Buckle up. This is going to be a bumpy ride. The past few days have been a real roller coaster. Tuesday saw a price drop that hit lower than a politician's approval ratings, reaching $60,800. But then, Bitcoin did a complete 180 faster than a chameleon changing colors, and started climbing. Today, it come back to $61K mark again. So, what's causing all this volatility? Well, it's a bit of a crypto cocktail. The stock market's been jittery lately, and Bitcoin tends to move with the market like a synchronized dance team. Plus, there's some uncertainty swirling around the Fed raising interest rates, which could make Bitcoin less attractive for some investors, like a new restaurant closing before you can try it. But despite the short-term chaos, I'm still a Bitcoin believer. This digital gold has the potential to be a major player in the future, like a revolutionary way to store your wealth. The road may be bumpy, but Bitcoin ain't going anywhere, unlike a celebrity marriage. Remember, this ain't financial advice. Gotta do your own research. But if you're looking for a long-term investment with serious potential returns, Bitcoin's definitely worth considering. As for today, I'm cautiously optimistic. Prices seem to be calming down, and I wouldn't be surprised to see Bitcoin break above $64,000 soon. Of course, the stock market and the Fed are still wild cards, like a magician's hat full of surprises. So, what do you guys think? Bullish or bearish on Bitcoin? Let me know in the comments below. And if you have any crypto questions, hit me up faster than you can say blotsarte. Package sartrido. All right. Let's chat about what's going down with Binance and the U.S. Department of Justice, DOJ. So, the DOJ has brought in this group called Forensic Risk Alliance, FRA, to keep an eye on Binance for the next 3 years. It's like having a hall monitor, but for a huge crypto exchange. The FRA's job is to make sure Binance is playing by the rules, especially after they agreed to a plea deal last November. Now, this plea deal wasn't just a slap on the wrist. Binance had to cough up a whopping $4.3 billion in fines, and their head honcho, Changpeng Zhao, had to admit he did some no-nos, step down as CEO, and even spend 4 months behind bars. The FRA folks are going to be all up in Binance's business, checking out their internal records, facilities, and chatting with employees to report back to the government. It's serious stuff because FRA specializes in sniffing out corruption and fraud. They've been around the block, having advised a big commodity trading company, Gunvor SA, in a massive $660 million deal with the DOJ over some foreign bribery accusations. This gig with Binance is expected to be a pretty sweet deal for FRA, money-wise. It's such a big deal that a bunch of lawyers and consulting firms were tripping over themselves to get a piece of the action. There was this one firm, Sullivan & Cromwell, that everyone thought had it in the bag to watch over Binance. But plot twist. They used to work for FTX, Binance's old rival, and that got messy. So the DOJ went with FRA instead. Sullivan & Cromwell isn't exactly crying over spilled milk, though. They used to advise FTX before it went belly up last November, and they raked in about $170 million in fees trying to get money back for FTX's creditors. Some folks who lost their shirts when FTX tanked think Sullivan & Cromwell didn't catch some shady stuff that Sam Bankman-Fried, FTX's co-founder, was up to. But the new bosses at FTX are defending Sullivan & Cromwell, saying they're doing a bang-up job recovering assets. The people hurt by FTX's downfall are giving 2 thumbs up to the DOJ for picking FRA to watch Binance. They're like, truth wins. And just this week, FTX said they're going to make their customers whole, giving back all the money and interest they lost during the bankruptcy. And guess what? Sullivan and Cromwell might still get to play monitor for Binance, but this time for the Treasury Department's Financial Crimes Enforcement Network, and that's a 5-year stint. Binance has got its homework cut out for them. They need to spot and report tens of thousands of sketchy transactions that the Treasury Department says they turned a blind eye to in the past. So there you have it, a bit of legal drama, a dash of crypto chaos, and a whole lot of watching the watchdogs. It's like a financial soap opera, and we're just waiting to see what happens next. Now, let's break it down into the story about Roman Storm and the whole Tornado Cash saga. So, the U.S. Department of Justice, DOJ, is basically saying, "Hold up, Roman, your free speech argument isn't going to fly here." They're prosecuting him, but they're clear that it's not about squashing his rights or anything. The DOJ's main beef is with how Storm used Tornado Cash's code for some shady money moves, not just because he whipped up some code. It's like, if you use a recipe to bake a cake for a bank robber's getaway snack, it's not the recipe that's the problem. It's what you did with it. So Storm's in hot water because he didn't just post code online. He ran a full-blown business with it for years. And let's be real, Tornado Cash. The protocol isn't the same as Tornado Cash, the business. Just because there's some open-source code involved doesn't mean every action Storm took gets a free pass under the Constitution. The DOJ is zeroing in on Storm's intentional actions. They're like, "Dude, you ran a money laundering operation that pocketed you millions and cleaned over $1 billion from illegal stuff." That's the crux of their criminal charges against him, which include conspiracy to launder money and operating an unregistered money-transmitting business. Now, Storm's side of the story? He's like, "I didn't buddy up with bad actors like North Korea's Lazarus Group, and I had no clue they were funneling dirty money through my crypto mixer." He's still holding out hope to dodge the charges, arguing that the DOJ's got a fuzzy take on money transmission laws and that the case against him is baseless. His legal squad is probably going to bring up an old case, Bernstein vs. DOJ, where the government had to change rules about putting encryption software on the internet. Storm also says the DOJ's out of line for prosecuting him for sharing Tornado Cash's code because it's open source and should count as free speech. But the DOJ's not having any of it. They're like, "Nope, we're not charging you for sharing the software, buddy." It's all in the hands of Judge Catherine Polk-Failla now. She's got to read through the DOJ's counter-arguments and decide whether to toss Storm's case or let it roll. This whole thing's got the crypto community on the edge of their seats because it's stirring up big questions about free speech and where the line is between code and business. Like, can using open-source code for illegal stuff be a crime? And does the DOJ have the right to go after software developers for their users' actions? Whatever the court decides, this case is already setting up some major precedents for how the law plays out in the wild world of crypto. All right, let's dive into Mark Cuban's take on the whole crypto regulation thing. So, Cuban, who's made a boatload of money investing in all sorts of stuff, is saying that if we let the CFTC, Commodities Futures Trading Commission, handle all the crypto business, it could be a game changer for crypto fans and maybe even help President Joe Biden snag a second term. Here's the deal. Cuban's shouting from the rooftops that Congress needs to get its act together and make the rules crystal clear for the crypto industry before the 2024 presidential election rolls around. He's convinced that this clarity could be the golden ticket for Biden's re-election because it would solve a big headache for crypto voters. But wait, there's more. Cuban's throwing some shade at the SEC, Securities and Exchange Commission, and its head honcho, Gary Gensler. He's not a fan of Gensler's tough love for crypto, saying it's made it super tough for legit crypto companies to do their thing in the States. And get this, Cornerstone Research dropped some numbers showing that the SEC went all out with 46 enforcement actions against crypto firms in 2023 alone. That's a lot of wrist slapping, right? Meanwhile, Rostin Behnam, the big boss at the CFTC, is hinting that they're gearing up for a fresh wave of crackdowns in the crypto world in the next year and a half. Now, with the U.S. election coming up on November 5th, it looks like crypto is a hot topic for voters. There was this online poll where a bunch of registered voters, like 2/3 of them, said they think crypto is their jam, and it's going to make the financial system fairer for everyone. But here's the kicker. The Biden administration has been catching some flack from the crypto crowd lately. Charles Hoskinson, the guy behind Cardano, straight up said that the Biden team seems hell-bent on tanking the U.S. crypto industry. This all blew up after Biden said his administration plans to propose a joint resolution to flip the SEC's guidelines and tell banks to cool it with holding crypto assets. So, what Cuban's laying down is pretty simple. Give the CFTC the reins on crypto, make the rules clear, and maybe, just maybe, Biden will get to stick around in the Oval Office for another 4 years. And if things go south, well, the crypto voters' voices might just be loud enough to make some waves in this election.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.